To achieve your financial targets and regulate your expenditures, you need a budget. Generally speaking, a personal or household budget is a breakdown that evaluates and records your income and expenditures over a specified period, often 1 month. While the term budget is typically associated with financial restrictions, a spending plan does not always have to be restrictive to function correctly. Greetings to all of you! Financial and Investment Wisdom is back with more money-saving advice. In today's episode, we will cover the simple steps to developing a personal budget. But first, make sure you clicked the like and subscribe buttons on our channel. Creating a documented monthly budget is a financial management tool that allows anyone to plan how much money one will spend or save each time, including how much money you will generate. As a bonus, it lets you keep tabs on your purchasing patterns. When you create a budget, it will tell you how much money you intend to receive. Then, you can start comparing that amount to your mandatory expenses such as mortgage and insurance, and your discretionary expenses like entertainment or dining out. It is possible to look at a budget as a tool for reaching your financial objectives rather than as a hindrance to them. Budgeting is a necessary component of keeping your finances in order, even if it does not seem like the most exciting or fun thing to do. The first thing you need to learn is that budgets are based on equilibrium. If you spend less in one area, you can spend more in another. Save that money for a significant purchase, create a fund, expand your assets, or invest in growing your wealth. While you can still budget your money using traditional methods such as taking notes, utilizing a monthly budget spreadsheet or a budgeting app is far quicker and more accurate. Income and cost categories will be identified in these spreadsheets, and constructed algorithms will assist you in determining your budget surplus or deficit with the least amount of effort possible. Here are some easy steps on how to manage your budget. Prepare all your financial statements before you initiate your budget planning. Among the documents you will need are bank and investment statements, current utility payments, credit card bills, receipts from the last 3 months, and housing or automobile loan statements. All your financial information, including your income and expenses, must be readily available to you. One of the essential steps in the spending plan process is the compilation and calculating of a monthly average. The more data you can acquire, the more beneficial it will be. The following stage in creating a budget is determining how much money you earn every month. You need to identify what kind of income or how you are being compensated. If your payment is received in the form of a regular paycheck from which taxes are regularly deducted, then using the net income amount is acceptable for you to use in the computation. If you receive your salaries on the 15th and 30th of each month, you double the number of your paychecks by 2. When you are compensated bi-weekly, you will need to multiply your salary amount by 26 and divide it by 12 to calculate your net pay. Add in any additional income you receive from self-employment or other sources of income, such as child support or Social Security if you have them. When you have more than one job, have unpredictable income, or are self-employed, the process for calculating your net income will be a little different from that described above. Make a note of the entire amount of money you earn every month. For those who have a changeable income, such as those who work seasonal or freelance jobs, it is a good idea to use the income from your lowest earning month in the previous year as your ordinary income when putting together your budget. Following that, you should make a list of all the expenditures you anticipate incurring during a month. Rent or mortgage bills, auto expenses, insurance, food, electricity, recreation, hygiene products, dining out, childcare, cost of transportation, vacation, college loans, and savings could all be included on this checklist. Utilize your bank accounts, invoices, and credit card statements from the previous 3 months to track down all your expenditures. Arrange everything into categories to help you identify things. Using general categories such as food and particular subcategories such as restaurants, groceries, and coffee can be beneficial in gaining a better understanding of your spending habits. Howdy! How is the video going so far? To spread the word about personal budgeting, you may like and share this video. Continuing the process. After listing your expenses, determine fixed and variable costs. In the case of fixed expenditures, these are the expenses required to be paid at the same rate every month. In your calculations, incorporate items such as rent or mortgage bills, auto payments, fixed internet access, trash collection, and scheduled childcare. If you make a recurring credit card bill, list that amount and any other necessary expense that is consistent from month to month. When you intend to save a fixed amount every month or pay off a specific number of debts each month, you should stay within your monthly budget. Variable costs vary each month, including food, dining, shopping, exercise sessions, and presents. Review your invoices as well as your online banking and credit card bills. You should also check applications like Venmo and PayPal to get an approximation of your variable expenses. Everything you spent money on last month that was not a fixed expense should be listed. However, even though these figures could differ from month to month, beginning with the transactions from the previous month should provide you with a reliable idea of your spending patterns. Now that you have compiled a comprehensive list of your spending and are confident in your ability to distinguish between different types of expenses, it is time to add them all up. Calculate your monthly fixed expenses to find out how much money you are spending on them every month. You can use this figure as a starting point for your monthly budget, since it is unlikely to change drastically from month to month. You may determine how much money you have left over for variable expenses by subtracting your overall spending on regular bills from your net income. On the other hand, tally up all your variable expenses and add that amount to the sum of money you consume on fixed costs to arrive at your final total. Is that figure higher or lower than your overall net profit? If you are spending more than you earn, you are living beyond your means. Adopting the 50-30-20 budgeting approach may be a good idea if your income exceeds your expenses. When you follow a 50-30-20 plan, necessities or essential purchases should account for half of your finances. Wants or leisure should account for another 30%. In addition, savings and debt repayment should account for the remaining 20%. Once you have determined your overall spending, you will need to make adjustments for your budget to work effectively. If you find yourself in a scenario where your expenses exceed your income, look for areas where you may reduce your variable costs. Fixed payments are more difficult to reduce than variable expenses. However, it may be challenging to make up for the difference if you are significantly overpaying on fixed costs. Look for areas where you can cut back on expenditure, such as eating out less, or categories where you can eliminate spending, such as canceling your gym membership. Alternatively, if you are overpaying on rent, explore a less expensive rental choice, such as living with roommates, to reduce your monthly expenses. It is possible that lowering your variable expenses will not be enough when your costs exceed your earnings, or if you have significant financial obligations. To balance your budget, you may need to reduce your fixed expenses while increasing your profits. Make an effort to ensure that your revenue and expense columns are equal. This equal balance indicates that all your money has been accounted for and allocated to a specific cost or savings objective. After you have created your budget, you must keep tabs on each category of your spending for the duration of the month, ideally daily. Use the budgeting spreadsheet or app to keep track of all your income and expenditures. Keeping a record of your monthly spending will help you avoid overspending and detect wasteful or unhealthy spending patterns. Rather than leaving it off until the end of the month, take a couple of minutes every day to track your expenses. Above all else, keep in mind that a budget will only be adequate if you are entirely truthful about your income and expenses. A successful budget requires you to be open to working with thorough and precise information about your earnings and spending patterns. Keep in mind that your budget should be working for you, not against you. Are you prepared to construct your budget at this point? What are you waiting for? Grab some paper and a pen and get started creating your budget. Let us know what you think about today's video in the comments section. For more helpful financial advice, check out our YouTube channel. And if you enjoyed the video, please do not forget to like and share. We will see you next time.